Hello and good afternoon. I welcome you to today's weekly market outlook here, especially or exclusively for Admiral Markets. My name is Jens Klatt, and I'll be the moderator here of the upcoming 45 minutes around. I think we will cover what happened over the last days in the markets, what will happen over the last week, then which economic events are of interest, especially, and this is probably even more important and more interesting for most of you now listening here, respectively watching the recording. What can we expect from the trade negotiations between the US and China? Just a few seconds ago, it's or probably it's 3 minutes, Donald Trump here tweeted something where the message is terrorists are better than a deal. So very, very similar to that, and we'll look at this in a few seconds, and I think this perfectly summarizes where do we stand right now here. How likely is it that we get to see a deal? I think we are far away from a deal. That's something many probably have already expected after months of ongoing tweets and mentionings, especially from Donald Trump, but also from his administration here, Steve Mnuchin, especially Larry Kudlow, for example, chief economic advisor. I'm saying that trade talks are going well, and that it will be the greatest deal of all time. Well, at the end of the day, you don't emphasize this over and over again, especially not publicly, once these talks are really going well. And this is exactly what's currently seen here, I think, and has driven the markets over the last days. But before we start, as usual, we have to have a look here at the risk disclaimer. Very important. Trading with financial instruments offered by Admiral Markets carry a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into a client agreement or making a transaction, please make sure that you read the terms and conditions of the service from Admiral Markets. The full risk disclaimer, that was only the first 3 sentences, can be found on the website admiralmarkets.com. For further information, please check the website here. Then, nevertheless, as usual, let's have a look here now at the differentiation between retail and professional clients. Since August, so-called ESMA decision, there were important changes for Forex and CFD trading. There's now a leverage restriction for retail clients with a max of 1 to 30 for Forex majors like USD, for example, but also 1 to 20 for so-called minor currency pairs, for example, GBP Australian dollar, and also CFDs on indices like the DAX 30, which we want to have a look at here in the presentation a little later, but also gold, for example. And this leverage restriction is not of interest. Of interest, probably. It's nothing which professional clients are affected by. So someone who recategorizes as a professional client does not face these leverage restrictions, but nevertheless, therefore you have certain criteria to meet here. It's 3 points, and you have to meet minimum 2 of them. Further information, please feel free to check out also the website from Admiral, respectively. Reach out to Admiral Markets directly for further information if this is of interest for you, if this is something you probably need for your trading strategies. Negative balance protection. Retail clients have an unlimited protection after this ESMA decision. That's also something worth mentioning. While, and this is special about Admiral Markets, here professional clients have up to £50,000 negative balance protection according to their policy. It's definitely something worth mentioning here. And that's me, the picture or the face to the voice you're currently listening to. I'm located in Berlin. Admiral Markets, we will have a look at several offices here from Admiral and where you find them around the globe. Admiral Markets has also an office in Germany and here in Berlin, so the city I'm living in. And what I can say from my experiences in this industry, so I'm in this industry now for nearly a decade. I'm in the financial markets for even longer than that. So I traded at a stockbroker, for example, as a trading assistant during my studies of mathematics and economics. So I worked in a bank as an employee there. So nevertheless, nearly a decade in this industry, FX and CFDs, and when referring to Admiral Markets, you usually refer to them, or you hear that people are referring to the so-called DAX expert, and this is really true. So it's a very competitive offering when trading the DAX with a typical spread of 0.8 points during main trading hours. There's also an offering, so-called Admiral Prime offering. There you have 0.2 and an additional commission on top of that. This is especially interesting probably for traders who are looking for short-term engagements, respectively, are so-called scalpers. And definitely something worth mentioning here. Also very competitive offering when it comes to FX trading. Also, again, all details can be found on the website, admiralmarkets.com. There is here something I already mentioned, One World Global Offers, several offices around the globe, one in Germany, but also, for example, one in Chile or one in Australia, for example, where Admiral holds an Australian financial services license here. Yeah, also, if this is something of interest for you, feel free to reach out to Admiral and get further informations and details on the different offices around the globe, different regulatory bodies. Here are the contact details, and then let's switch over to the agenda and what we want to look at. I already mentioned it at the beginning. What are the key economic events in the coming week here? What is the current bias in FX, equity, and commodity markets, and then sure which trading opportunities may arise. And from here, let's switch over then to the markets, and probably let's have a look here at the DAX first, which is yeah, I have to say, which is definitely very interesting to look at, especially after the price action over the last days, especially after all these comments were made around negotiations between the US and China. And what we can clearly spot here is a sequence since the beginning of the week, after Donald Trump here tweeted that tariffs will be increased to 25% from 10%. And that was a tweet already last Sunday. It came as a surprise for many, which were about to come to Washington. We are currently in Washington, D.C. for further negotiations here, but now face a lot of pressure. In fact, these tariffs were brought into place tonight. Yes, in fact, yeah, we're brought into place tonight. And the thing is that I already said that this is probably, first of all, a sign of goodwill that the Chinese are nevertheless, even though this threat of imposing tariffs now from 25% from today onwards came to Washington, and nevertheless, it's a very, very difficult situation in general, because I have the feeling that Donald Trump is not in such a strong position right now, not necessarily only when it comes to these negotiations against the Chinese. We have to remember that China is a very, very important partner of the US, especially when it comes to buying US treasuries, for example. So it's if I'm probably, it's not right anymore that they are the biggest creditor of the US. I think this is Japan when it comes to holdings in USTs, but nevertheless, it's the second biggest, and has been the biggest before. And so with this said, I think it's very, very, very important to mention that the Chinese and the US are on the same level here when it comes to these negotiations. And putting these threats out here, especially via Twitter, and in my opinion, I'm not very familiar with the way Chinese negotiate deals, but I think that it's a lot of trust and respect in those negotiations usually, and then they're not very happy about the behavior of Trump. That could already be seen last year, and I think it was November in Buenos Aires, when at the G20 summit, Trump and Xi Jinping sat together, and I think it was the beginning of the week, was Sunday, Monday, I'm not sure, when Trump tweeted some details on their negotiations, where the Chinese just said, okay, we didn't say that, if we remember right the conversation, or this is a misunderstanding here. Or from which it only recovered due to a positive performance from US equity markets then in the afternoon, only to see that all those comments, tweets, and everything made by Trump over the day then, over trading US trading hours here, were then worth nearly nothing overnight, and that was when the Chinese markets opened, and somehow it became obvious that the only target seemed to be somehow pump up US equities and then result or deny everything which was said overnight when Asian markets are open while US equities are closed, only the futures are tradable, and then we see a push lower in Chinese equities here. And that's something also which happened yesterday, in my opinion, when we saw this push towards and below 12,000 points, and then the sharp reversal into the evening. And we can see here another push lower. By the way, I've prepared already the tweets. I've prepared it via my Twitter feed, by the way, so to not need to switch between different tweets here, or how can you say that? Twitter feeds, yeah, probably that's the right way to say it. So yesterday, it was really interesting. First of all, this is the first thing worth mentioning, which is perfectly illustrating, in my opinion, why it's not necessarily the case that even if Trump, as he did several minutes ago, tweeted that tariffs are better than a trade deal, that this does not necessarily need to cause sharper declines in equity markets. Yesterday, here, a journalist asked Press Secretary Sarah Sanders if the White House is prepared for the stock market reaction tomorrow if there's no trade deal tonight, and she said, we're always prepared. Remember, in December, around Christmas, the plunge protection was brought into play by Steven Mnuchin. And I think the Trump administration, or President Trump in general, is very, very keen about getting or pump equity markets higher and do whatever it takes to pump them higher. So even if there's a sharp spike on the downside, that does not necessarily mean that we stay there, but instead we get to see strong buying from, for example, the plunge protection team to shoot equities higher. And this is something to remember here. It's not necessarily said that if no deal is struck today, that markets will collapse, but in fact, it could be that the market will probably see a sharp spike on the downside and then shoot higher. And then there was also something causing yesterday's rise in equities. That was this is the perfect example of what I just said, and that the strategy of trying to pump US equities during US trading hours higher and then deny this message here, something you will see in a few seconds. So first of all, Trump yesterday said that he just received a letter from China's Xi Jinping, and that this letter says that there's an alternative to a China deal, and which he referred to as excellent. And so now things are, what shall I say? It became obvious that this was only his point of view, but he succeeded in pumping U.S. equities higher. Here, there's a journalist who is very close to the Communist Party in China, and he says more and more Chinese now tend to believe the current U.S. government is obsessed with comprehensively containing China trade deal, even if reach will be limited in actual meaning and could be broken constantly. So they support being tough on the U.S., giving up any illusion. So, which perfectly illustrates, I think, the current environment in which we are. I think we are far, far away from finding a deal, but still markets are strong, or compared to yesterday, they're at least stable. They are not selling off sharply. So now the denial in the morning, US-China talks see little to no progress, people familiar say, and there's also something which points to so far not making any progress at all. It seems as if there will be really a call between Xi Jinping and Donald Trump. That was something which was mentioned here in the morning. President Trump and Xi are expected to have a phone call. The vice prime told the US delegation, so this is Mr. Liu He, this is the vice prime minister of China. Well, and then it's now up to the world leaders now. Well, when I read this, it was that I thought probably this is especially what Trump was after the whole time, talking to Xi Jinping himself, somehow finding a deal. If not, well, but probably he can sell it as having found a deal, and then present himself as the big deal maker again, and not being yeah, and being the only one having struck such a deal. And it's a mano a mano deal, if you understand. And yeah, so then this is also something that this is not purely speculative, but something which is becoming more and more obvious. Here's again this journalist from the Chinese referring to exactly these developments in equities, in US equities, respectively in Chinese equities. So China's stock market closed Friday, so today at 3 a.m. US time, with the Shanghai Composite Index rising 3.1%. Today's trading spans over time when US new tariffs took effect. So the tariffs took effect overnight, and that was during trading hours here. So there was many market participants and journalists and many others who thought that this was only a bluff from Trump. It became clear that it wasn't, but nevertheless, there was still some hope at the end of the day. I think also Goldman Sachs wrote in a note, if I'm not mistaken, that they think it was a bluff, and gave it a quite high probability. And now the interesting thing, this shows that China's market largely withstood the initial wave of psychological impact of Trump's tariff stick. It's US market's turn next. That's also something which is becoming obvious. So the games on the stock market are obviously they are games played, let's put it that way. And this is something to remember when entering the market. So why do I mention all this? I think, first of all, to give you an idea of where we stand right now, but from a trading perspective, it's very, very interesting, because we really, I think I can't really draw a clear picture of in which direction the market will push. So you have already seen that I've brought a bullish scenario under the idea that no trade deal is found. It could be also the other way around. Markets could probably completely collapse if no trade deal is found. If a deal is found, market can still collapse, because the deal can be a difficulty, let's say, or a deal which is not considered a significant long-term deal, which is not broken over and over again here. Which could also cause uncertainties about the future and future steps, especially from Donald Trump then against China here to punish them for violating any rules in the deal, for example. This could also result in a sell-off in market. So it's really, really difficult to say in which directions market will go. Nevertheless, it's very important to understand that this is a market environment in which you can only hope, with trading strategy, hopefully proven profitable trading strategy, to wake up on the right side of variance, but be aware of the risk all the time, which means you definitely need to have you have to have clear risk management rules and place a stop, and know when the trade is wrong, and just take it out, and that's it. So for example, let me give you an example from my end. From yesterday, I was short the DAX here with a break lower. Yesterday, when we broke to new intraday lows, that was around 12,050 or so. So this is now a 50-minute chart, and there we have it. So that was the low, and then with the US equity markets opening shortly before that, we broke lower and also pushed below 12,000 points. And initially was really happy to have this position, and in fact, I only fell short 20 points here to reach my take profit on the downside. And then we saw this sharp rise higher after the tweets from Trump, the mentioning of the letter from Xi Jinping and all this. And at the end of the day, I had to take a loss. I wasn't stopped out, would have stopped out once the market makes new daily highs in this case, but this didn't happen. Nevertheless, I took a small hit here, and I was fine. So it's not that I was happy about it, not at all, but nevertheless, I didn't become overly emotional about this trade or something, because I knew what I was risking, and that was okay. It was completely fine for me. And this is definitely something I highly recommend to you. Be aware of the risk. We don't know in which direction those talks will lead us, and we don't know whether markets will push higher or push lower. But what we know when taking a trade is what we should know is, what do we risk here on this trade? What couldn't we lose? And then just see whether it plays out or it doesn't. So now let's look at it from a pure technical standpoint. Falling highs, falling lows, obviously. So which means as long as we trade below here, 12,220 points, the overall advantage in this environment is is found on the short side. Still, that we didn't break lower and below yesterday's lows is in my opinion, first positive sign. So all in all, I consider the current environment neutral. Higher, but what you all look for is gain and then price in this case, and a positive P&L at your end, which means everything above 150 has a good chance at least to go for an attack and try to break this structure of falling highs and falling lows here and go for 12,220 points. Once we break here below the yesterday's lows and 11,950, then we have a very good chance to go lower. And you can see it here, but let's switch to the daily chart. But then I think we have a very good chance to go for a test of 11,800, 830, and also see a test of this region then into the weekly close. Do I recommend holding positions over the weekend? Currently, not at all, to be honest. So, and this is true for long engagement as it is for short engagements, because you just do not know in which direction these talks will go. If we look at the current informations we get, then I have to say it's very likely that we don't get to see a deal here. Nevertheless, as already stated, it could also be that the market will react bullish to this. It's also true that the no trade deal leaves markets vulnerable to a complete sell-off on Monday. And with this uncertainty, you just do not want to have a position overnight, respectively, not only overnight, but also over the weekend, and not knowing in which direction it will most likely go here. Yeah, and so I'd highly recommend being flat and going flat into the weekend, and then probably start to think anew from next Monday onwards on which side to position based on the situation in the markets and on how markets react to any news coming over the weekend. So then let's have a look at the here at the FX markets. I have to say I was really surprised to not only see the reaction to the non-farm payrolls last week. Some of you might remember that we had an outlook on the non-farm payrolls last week in our weekly market outlook. It was a very interesting outlook, to be honest, because it came as expected. We had solid NFPs, and I also said that you should usually expect the US dollar to gain from a good employment report here. And initially, the US dollar really took on momentum, similar to what happened already the one week before with the GDP report. GDP data, which came also better and better than expected. And now the thing was that it was only a short-lived bullish reaction, but then we saw an aggressive attempt to down talk the US dollar from the Trump administration. Steve Mnuchin came out, also Larry Kudlow both saying that they somehow urge the Fed to cut rates, in fact. Yeah, for whatever reason. I mean, employment situation is solid, GDP data is solid. What's the reason behind this? There's no rumor saying that Trump wants to avoid, under all circumstances, that the US will enter recession, which is already forming on the horizon. That's something we have to say with the inversion of the 2- and 10-year US yields here, that Trump definitely wants to avoid that the US falls into a recession before the election in 2020 November takes place, because this would definitely be potential reason not to vote Trump again. And this is just rumors. It's just purely speculative if this is the truth. But all in all, it nevertheless caused the US dollar to sell off into the last week. The weekly close here, in fact, and Euro USD closing the week around 112 and not below 111, what you should usually expect on such a strong reading. And it also resulted in the fact that I started heavily thinking about the weekend whether I want to stay Euro USD short, and I came to the conclusion that I'm willing to exit the position then on Monday, and then on Sunday, these announcements, these tweets around tariffs, well, usually this is a reason to be positive again on your position, on the US dollar especially. And the reason for that is that the country which imposes tariffs usually should see their respective currency to gain, because the country affected by the tariffs, in this case, for example, the Chinese, but also Europe, if any tariffs are imposed against Europe, or also Japan or the Japanese yen in this case, usually you expect those countries then to counter such tariffs by devaluing their currency. And this means that the US dollar usually should gain on these news. Initially, we saw, but only a small dip on the downside in Euro USD again. And then from there, we are now trading back above 112. Volatility is subdued. That's something we have to mention. But what has all this to do with the outlook for next week? Well, I think we should expect the Euro USD to stabilize right now, trade in a neutral range, and not see an elevated volatility at all in general, and be really, really careful of expecting too much in regards to the developments here over the next week. And I think we will stabilize in a range somewhere between 111, probably also a little higher, 112 to 113, probably 113.50, and not see lots of volatility. Let me just here now apply a filter and give you an idea of what economic events are of interest next week. You can also see, in regards to the euro especially, there's no important news events at all. There's some US data coming out, retail sales, for example, on Wednesday, or Michigan consumer sentiment on Friday, next week on Friday. We can also see here that we have today then the core inflation, respectively inflation data from the US. It's coming out in around 1 hour from now. It could cause some volatility, but I think all eyes today will be on the trade negotiations between the US and China, and next week it will be the aftermath, and we have to wait in which direction markets will drift here. And based on all developments over the last days, again, I think chances are high that volatility will stay subdued in Euro USD, and we don't get to see sharp pushes on the up or on the downside. All in all, we can say on the upside, it's everything above 113.30 here on the upside has a potential to push us higher and then drive us up to 115. I have to say I'm very skeptical about the euro, so I don't like being overly long the euro at all. On the downside, it's 111. If we push below that, then further losses are likely down to 109, 109.50 around. But before that happens, we have to get to see such a breakout. And so far, it doesn't look very promising for the days to come then. Yeah, that's it on the Euro USD. Let's probably also have a look here at the GBPUSD. There's also interesting picture and in fact forming due to everything what we got to see here around the Brexit and this so far, again, rising uncertainty. So it's not only that here trade fears or trade war fears plays a role, but it's also that Brexit uncertainties is now gaining control again. So far, it still seems that the that Theresa May, the Prime Minister, has trouble find a deal here, and the Labour Party is somehow still not really willing to make a step towards her, knowing about her weak situation so far. And yeah, well, that said, I mean, it's really difficult to give an idea, also given the very neutral environment in which pound sterling is currently trading against the US dollar, but probably a drop below 130 seems the likelier outcome. Then with the first target on the downside being found, and at around 28, probably 27.50, 28. This is the first target, but still also here very similar picture to the euro, without having a clear idea of in which direction politics will go here, and especially the negotiations around the Brexit, with all this uncertainty around the trade war between the US and China, and the willingness from the Trump administration to somehow down talk the US dollar. All this is definitely something which leaves pound sterling against the US dollar so cable without a clear advantage on one or the other side, and increases chances that we are getting to see a very choppy environment. Again, any push below and further momentum on the downside is probably capable of pushing us towards 27.50, 28. On the other hand, if we can, for whatever reason, make it above 131.50, 31.70, then another attempt to attack 33.50 is an option. And yeah, in fact, that's it on pound sterling against the US dollar. What's definitely interesting is dollar JPY. Why is this? Well, look at the current developments here over the last days. No big surprise that JPY could gain some momentum. But today is also a very interesting data set coming in regarding the inflation rate. And why is that? Have a look here again. So today's data is expected to come in at 2.1%. And this is a surprise in my opinion, because the latest inflation data wasn't that promising, and it's not really justifying such a high reading or expectation of such a high reading, 2.1%. I think we're likelier to get to see a reading somewhere around 1.9, probably 2%, but this is definitely below the forecast, below the expectation. And what we know is that the dollar JPY is quite sensitive to such data, and especially when it comes to yields here. And if we get to see such a, in this case, let's put this in quotation marks, it's a disappointing reading then we have a good chance with upcoming risk aversion, especially if no trade deal is struck, and it's more likely to get to see some kind of risk aversion, that in addition to such an economic reading below expectation, that there will be a serious attempt then to break below 109.70, and that dollar JPY will gain further momentum on the downside down to 108.40 with a first target, and probably even lower than that, and then we go for an attempt to attack 104.7 here on the downside. These are the flash crash lows from January. In fact, these are the yearly lows, in fact. And yeah, nevertheless, we have to wait if such a break happens. If we can stabilize, if not that it doesn't come in below expectation, but we stabilize here, then I think we have another chance to stay in this range bound environment and see probably a push back towards 112.40 here, and yeah, see such an attack. Again, nevertheless, so far higher likelihood seems to be on the short side and to see a drop then to 108.40 in this case. So, and when looking at the dollar JPY, it's also worth looking at, say, gold then in this case. So in fact, we talked about this head shoulder formation for quite a while. And so the thing is that so far there was no real strong attempt to break below 1,266. There was a good chance already last week with the non-farm payrolls, in fact, but we didn't break significantly below that level. Again, main reason is the down talking from the Trump administration of the dollar, and we know about the negative correlation between gold and the US dollar, and that said, it's no big surprise to see the gold price then stabilize into the weekly close. So far, we are trading at a crucial level still. So this is a retest of the neckline and the potential short trigger. So any push lower from here, which where eyes naturally 1,266 USD, and a break lower then activates 1,230, 1,235 USD per ounce on the downside. Still, it's difficult to say in which direction we will push here, and it's very similar to what I already mentioned in regards to equity markets. So trade deal is struck. Usually this is good for a risk on move. Risk on is usually negative for gold, which means usually that gold should push lower. On the other hand, if a trade deal is struck, this is naturally affecting the US dollar. If we take the pure theory here, it should affect the US dollar negative. Because then countries which are affected by those tariffs, especially Chinese, do not need to weaken their currency against the US dollar, which is then, due to the negative correlation of those two markets, something which is negative for the US dollar, that's sad, positive for the gold. And with all this in mind, I think we have also here a very difficult spot, and should probably only focus on the pure technical side, and just put it as it is so far. And everything below this neckline and everything below 1,310 USD per ounce should be considered bearish gold, and we have a higher probability of moving lower, especially if we break below 1,266. If we, for whatever reason, push back above 1,310, then this head shoulder formation is negated, and yeah, I'm not saying that bulls are back in control, depending a little on the fundamental side, but all in all, that would definitely brighten the picture for the bulls, let's say. So, and yeah, that's it on gold. Probably also worth a look here, due to the technical relevance of this region around 135 and today's employment situation, which will be published here. It's not in this filter, but you can see it now. So it's not defined as an event with a high impact, but it's defined as an impact. So here it's Friday 10th of May, and then you can see here the employment situation in Canada now coming into our focus. So any data set which disappoints is probably good for another attempt for the dollar CAT, for the loonie here, to push above 135. This is probably also especially true if no trade deal is struck, because Canada and the Canadian dollar is definitely should be expected to be affected by any negative news around the trade deal. So any protectionism, any fears of a trade war, an escalation here, is definitely something which could drive the Canadian dollar lower. So if no deal is found, and then on the other hand, the employment situation in Canada disappoints, chances are very high that 135 is taken out today then. And the next potential target can be found around the highs here, the current yearly highs, around 36.70 on the upside as a first target. And if we break above that, and it's also possible that we keep on moving higher and rather sooner than later go for a test of 138 and probably even higher than that. So the overall advantage in dollar CAD in the current environment is definitely positive, and 135 is the threshold on the upside. If we break above that, further gains are very, very likely. And yeah, such a break levels potentially, in my opinion, the path up to 136.70 here. And that's it. That's it so far. So let's probably switch back to the DAX again, which is not taking on any further momentum here, as you can see. So over the last 30 minutes, we've seen that we've now taken a little hit here due to this tweet from Trump. By the way, let me just show you this. I've already prepared it here. We just need to scroll higher a little. So what did I just do? So there we go here. So this is the tweet from Trump. The tweet is not existing anymore. Is this a joke? So they just deleted the tweet. So you can see it here. So tweet is not existing anymore. Wow, this is interesting. Let me just look up what's the potential reason for that. I mean, obviously, it's probably something not very surprising. Let me just see if someone made this a topic. Could imagine Zero Hedge to probably have done something here in this regards. So what you can see here, tariffs will bring in far more wealth to our country than even a phenomenal deal of the traditional kind, also much easier and quicker to do. Our farmers will do better, faster. Starving nations can now be helped. Waivers on some products will be granted or go to new stores. Okay, now I can see it here, by the way. President Trump now deletes his tweet stating no need to rush China talks. Trump deletes tweet said no need to rush China. Well, this is really interesting. Okay, I think this perfectly illustrates. So this is really, as you can see here. So this is not exist anymore, but you can still read it, since I retweeted it. So this is if it's right or wrong. Well, it depends on from which perspective you interpret these lines. But still, it perfectly illustrates how difficult to analyze the situation currently is, and also that costs a lot of trust in Trump's tweets in the future. And why is this worth mentioning? I think something worth remembering in this regards is we're looking here at the developments over the last months when it comes to the developments in the S&P 500. I already mentioned this several times. After the sharp drop over the last 3 months in 2018 here in this region, Trump came out, was attacking aggressively the Fed and somehow forcing her to make a U-turn, even though they let it look a little different, since the Fed is very keen about saying we're independent and all this. But what's is definitely true is Steve Mnuchin brought up the developments here, or not the developments, the plunge protection team, if you remember. Then there was the U-turn at the beginning. That was the 4th of January, if I'm not mistaken, from the Fed. The Fed and the speculations around Fed hikes here plummeted to zero. Instead, markets are now pricing in a rate cut till the end of the year. And all this here, and also on top of that, the speculations which were held high that there will be a deal struck between the US and China, and all these tweets around this, they pushed markets higher and to new all-time highs. The only problem we now have is that, especially with the behavior from Trump over the last days, weeks, months, the trust is definitely diminishing more and more and more and more. And why do I mention it? Well, there will be a time, and I'm very sure about this, especially when a recession is forming at the horizon, there will be a time when markets really need support, and we really need someone to trust, especially in such an important situation in which US President Trump is. And with this in mind, I think this is something really difficult then when looking at the current developments here, because Trump is currently losing trust, lots of trust, and the chances are really high that he, or respectively his administration, is not capable of calming down markets if let's put it that way, if the shit really hits the fan. So this is definitely something worth remembering, especially when things turn sour and volatility increases significantly. So yeah, that's it from my end. Let's see how trade talks develop here, what effects this has on the markets, and I wish you all the best. Happy trading. Watch your stops. Have a nice weekend. Enjoy yourself, and talk to you again then next week on Friday, hopefully with new news and a clear statement on the trade and what to expect here. And yeah, that's it from my end. So all the best. Happy trading. Watch your stops, and see you soon. Bye-bye.